Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, December 23rd, 2025. It is 9:55 a.m. Eastern Time as I'm starting the video, so we're about an hour, about a half hour, that is, into the trading day. And here's what I'm going to do, and I'll try to keep it in this order. We'll look at the equity markets, starting out here with the VIX Volatility Index, closely related, pretty much moves inversely. Um, I'll probably skip the updates on OJ and natural gas because I got charts out to you today. These are just things I'm looking on my scratch pad that I have down. Um, uh, BIDZ, I want to do an update on some individual stocks like Oracle, Novo, maybe the ag input stocks, PSP, the private equity, and I'll do that with BIDZ. Treasury bonds, and then gold, silver, if time permitting. I just did a video on gold and silver for you guys the other day, but try to get there. So again, a lot of an eclectic mix, but that's typically how I trade personally, and what I try to do on this site is throw out different ideas, many uncorrelated, unrelated assets, different uncorrelated stocks, uncorrelated asset classes, stocks, bonds, commodity, crypto, etc. Maybe we'll even had Bitcoin. Let me see. Time permitting, let me put that down on the bottom. Okay. All right. So let's start out here with VIX. VIX is right now cracking below that uptrend line. As I've said, me personally, I don't do a whole lot in December. I take breakouts and breakdowns with a grain of salt. Due to the, especially as you really zero in down on the last few weeks of the year, you get close to Christmas, New Year's, holiday. A lot of traders are off, year-end position squaring, window dressing. So you have a lot, and I think Friday was a triple witching day last Friday. It's just a lot of noise, if you will. And again, so I've stated that many times. So for those of you listening to my voice that are still want to be engaged in this market right now, again, that's why I do these videos. But I will probably take most of today off after this. So what you have here, let me just draw this line out. Well, I just did. I'm going to draw it here. You have now, because we just made a slightly equal or slightly lower low on the VIX here. This is the spot VIX, which gives us now, extends the same divergence that we had in place right here. VIX was thrown out as a long entry here. We broke out, buy signal there, popped 100%, hit that level again, and now we have an extension, meaning the divergence starts at this point. You have a series of you have lower lows in the VIX volatility index and higher lows in the indicators, which is positive divergence. And remember too, if you look at it on a daily time frame, yes, the VIX is broken down. That may increase the odds we go down here if you want to analyze it, which again, based on what I've been saying for weeks now, due to the increased frequency of whipsaws, meaning false breaks of support and resistance, you might want to focus more so on a weekly chart at this point in time. So right now the VIX is cracking that trend line as well in the weekly chart. Should we get a reversal, and there's plenty of green, meaning real estate left between now and the close this week, even though we have the holidays. Market's going to have an early close tomorrow, I believe it is, on Christmas Eve. I think they close at 1. Obviously close Christmas Day, and then we'll pick things back up. So that's your update on the VIX. We'll see what happens. Somebody asked, Randy, is any chance the VIX can pop here by the end of the year? I think the question was the end of the year, and look, it's going to take, which I'll get to in a second. It's going to take the next leg down. We have to have another thrust down on the indexes, and I'm going to go over those levels right now for you. All right, nothing's changed on the longer term charts. As you guys know, on the daily charts, you have these potential megaphone patterns on the S&P 500, the Wilshire 5000, VTI, a lot of the broad-based indexes. This is SPY right here, and that's that partial rise shorting strategy where you can short a partial rise once you see a turn down there, and we're still back to that same level, and so no change. So no change at all. And again, to reiterate, for those of you, if you missed it or if you're frustrated, like I said, the stock market, the S&P 500 has gone nowhere now for months except sideways. We've gone a little up, a little down, And so that's that. There's not much more to add to that. Let's go down to the shorter term levels that are going to determine where we go in the coming days to weeks. This is my 60-minute chart of SPY. 60 minutes, kind of the go-to swing trading time frame. And last low right here was at support, testing those key October 10th lows that I've continued to harp on. That's still a level that I expect to go, and when it goes, I think you'll see an acceleration of selling at that point. And that's also where, in my opinion, it makes sense to go to a full or more aggressive short position for as far as swing or trend trading. And more recently, it came off of, we've come full circle, put in that divergent high right there, and started to move lower. Again, it's a watch, rinse, repeat thing. You just see these divergent highs. But remember, this divergent high on the 60-minute chart, though it's just spanning this time period here, we're also at a much more technically significant and more technically significant divergent high on the weekly and daily charts as well still. And that would indicate a much larger drop. So this is just kind of near-term swing trading stuff, these divergent highs and lows. And then to zero down, and this is what I believe my reply was yesterday when somebody asked, hey, is the VIX going to, any chance the VIX may move up by the end of the year? It's going to take both the S&P 500 and the NASDAQ 100 to break down. And so the S&P 500, here's our minor uptrend line. So after that divergent high there, you had an initial leg down right here. Nothing goes down forever. Typically corrective waves are, at least typically 3 waves. But again, this is sloppy, choppy trading action, guys. So it's very, very hard to predict, short-term moves. And but that's it. That's all I can tell you is that would be a sell signal there. And there's my next support, 681.67-ish. I'm going to lower it down a little to be safe. You have a big old gap right here. And then you also have support there. Gaps here, right there's a gap, another gap there, and so that's it. So support 1, support 2 at about 681.22. We can call it 681. You can round down, and that will bring the S&P 500 down, which will bring the VIX up. QQQ. Again, no change on the longer term charts. And QQQ also just kind of grinding around here for the last few months. This is kind of a busy chart, have a lot of levels, but this is the comparable uptrend line, which is already broken on QQQ. It just needs the S&P 500 to break that trend line to follow suit. Futures traders. This is ES, the S&P 500 E-mini futures, 3-month chart with hourly candlesticks. There we had a sell signal there. And not all marked. That was a divergent high followed by the drop. And we gamed that one. We had 2 targets from the NASDAQ 100. Both were hit there, recovered, reversed. This is the next divergent high, next drop right there. Next divergent high, wedge break, sell signal. We gamed that one down recently using, again, the NASDAQ 100. Ended with a divergent low, rally up. Ended with a divergent high, and that's where we are. Just like the S&P 500, really. So sometimes these lines just want to disappear, or maybe I didn't update this. Futures are constantly rolling, so I'll update my charts from time to time. So that's it. So divergent high, initial leg down, what may just be a kickback rally, just like that one. We had an initial leg down, snapback rally, followed by, several waves, but more downside. So that's it. We need to break those levels, guys. This trend line right here would be the one that needs to break on the futures. And then NQ, the NASDAQ 100 futures. Let's see which boards I have here. That's natural gas. NQ, where is it? Somewhere here, I have a 60-minute chart. Let me pause the video and find it. Oh, here it is. Okay, same thing. Divergent high right there, negative divergence. We shorted that. We had 2 price targets. The futures have rolled, so my targets have moved away. So we hit both our targets there and got out. Same thing here. We had a sell signal there. We gamed this thing down. We even gamed that counter trend bounce on 1 or 2 of these, and then covered at that low just before my final target was hit. That was the last official swing trade there. And then this is the most recent divergent high. Again, watch, rinse, repeat. You have negative divergence into that high right here, followed by a reversal that's begun. You did, however, on the NASDAQ 100 futures, get a little divergent low there. It's been the catalyst for this bounce. But this is the level you need to see. And this one already has broken. So we're just waiting for the S&P 500 to follow suit on that level I started with. Then you can see my next stop here, support there. And again, this is all shorter term stuff, has the potential to morph into something much longer. Again, a lot of noise year end. It's not that you can't trade successful. It's not that these can't play out. It's just that, again, you have increased chance of whipsaws and just noise and back and forth volatility as we head into the end of the year. Okay, we'll cover some of the trade ideas I threw out to you in recent videos. I didn't make them what I call official trade ideas. I just kind of highlighted them in the video. And one of those was BIZD. So the last update I gave you was right here. All right, so to kind of recap, if you're new to the site, this was a key level I was watching before they were even in the headlines, before many retail investors knew what a business development company was or private credit. I was eyeing this and saying there may be, risks for the markets if this breaks, and that was a level that would trigger a sell signal. It broke. Then I give you 4 price targets. We hit the 4th and final target. Then everybody was talking about them there and the risks in the market. And then we had the 2 Tricolor and First Brands blow up, those 2 bankruptcies. JP Morgan warned about other cockroaches when you see 1 or 2. And there was an abatement. So while the world was panicking, we went long, covered there. And I gave you 3 price targets, 1, 2, 3. When 2 was hit, I said, nope, I'm going to call it. I'm going to remove that target. And we certainly had a pull back to almost entry there. So you would have pretty much locked in the easy, we shared the easy meat off the bone. Then we continued on up and we hit what was initially my 3rd and final target at which just a couple weeks ago I told you it now offers a new objective short entry, and told you we could swing it back to the 2 previous price targets, and now that's been hit. So all said and done, from the 1574 breakdown down there, that was a 14, almost 15% drop. We turned around, gamed it for 8% plus on the upside, not including any dividends that might have been paid. Sidestep that give back, and then again, that was the last level. So I wanted to point out where they're now. So a great time to either cover shorts, which would be my preference, or lower stops to protect profits in case we kick back. They'll probably come in and buy it here unless there's something going on. I am watching some of these companies wobble. I'm not going to do a deep dive into them, but I do look at the components and the individual. I have watch lists of both the components of BIZD here, the main go-to ETF that covers the business development companies, and I also have a separate watch list with some other ones in there. So just wanted to mention it's not a bad time to harvest some profits on that if you happen to short it there recently. The other one gave you that was been moving lately. This was given in the comment section. I already covered it last week. Calling it down to this level right here on my last updates. With sell signals and the objective short entry here on the bounce back to the 200s, and then as I highlighted it as a long trade idea off that level, time to cover it. It was really nice gap support, price support, also the final downside target I had it going to, and then it's good for I think double-digit bounce so far, and about 10-11% bounce off that level. At this point in time, I want to say I have. It was a small divergent low, some pretty, that was a much bigger divergent high. Again, another one, if you took that bounce, if you covered the short there and or went long, great time to maybe just harvest some gains and step aside and let the dust settle. And then we'll wait for the next objective long or short entry on this one. Another one that, we had as both a swing trade and a long-term trade is Novo. Novo got approval yesterday on their oral version of Wegovy, I believe it was, which is showing just about equal efficacy for the oral-based pill versus the current version, which is an injectable. I'm talking about the big, that's the big weight loss drug. And that's a big one because a lot of people are averse to, a lot of people would rather take a pill than inject themselves. And so, however, what it means to us is a technical breakout. There was a downtrend line I've showed you. We had a bullish falling wedge. This was a swing trade here. When we bought it that low there, went up to basically T5, my fifth and final swing target. And then at which point, well, it was right here. I said it wouldn't surprise me, and I was leaning towards another retest of those lows. That's what we got. And when we did that, we made it a divergent and marginal new and still divergent low. Then we have now we have today a breakout above that downtrend line. So that's net bullish. When I give you the trade way back here, we bought it at this long-term support level. I gave you two longer term, what I call trend targets based off this. This is the weekly chart, a longer term time frame for your less active swing and trend traders. Those are traders that will hold and position and not try to game all the little squiggles like we often do on the on daily and 60-minute charts. So we went up, we hit my first price target there. That's the downtrend line. Pulled back, put in that marginal new and now divergent low on the weekly. And there's that downtrend line. So if we can pop that, remember, T1's already been hit. The trend line's already, if the trend line gets taken out, that should take us up to that T2 level. And so Novo's still looking good longer term. And now, better near term now that it took out that downtrend line on the daily here. I covered BIZD, the private credit, private equity. Again, they're married very much. So a lot of private equity companies also have their hand in private credit. So they broke that trend line there. It's been slicing through the 200s. So I wouldn't put a lot of weighting into them. It's kind of been moving back and forth. Again, kind of going nowhere. But I did want to point out that it took out that uptrend line there. Again, I don't have a strong opinion near-term direction, but it's somewhat related to BIZD. And again, if anything, BIZD is probably going to bounce here on that pullback to that drop to that price target I give you. We'll do an update on Treasuries. We had was durable goods was missed by a mile today, but GDP came in hot. This is either a pure play long or a indirect hedge to any index shorts, as I've told you. And we threw it out right here. This is where I gave you the TLT long on the 87.24 support with positive divergence. We went up, hit my first target almost to the button, and as is usually the case, had a pullback, a reaction, which has given us now another pullback to our reentry point. So active traders could have reversed it there, shorted, and now cover, and we're still back to the original entry point, which was support, and still with positive divergence. So that's still very much an objective entry or re-entry point if you're in this one. Those are still my targets there. Stop somewhat below. Somewhat's going to be relative to your price target or targets, whichever ones you're looking at there. And let's not forget the bigger picture, much more significant picture. When I look at long-term, when I look at bond yields, this is the 30-year, which is, TLT is the ETF that tracks the 30-year bond, but this is a yield. This is going to be net bearish for the stock market if it happens. That's a breakout in yields. And this would be catastrophic, anything above that level right there, because that is a multi-decade high in yields. And I will eat my shoe if the stock market isn't in hard-blown meltdown mode or, dropping very hard if and when yields get back up there and break out. This is what it looks like. Longer term, very long term, we'll go here. This is TYX, the yield on the 30-year bond. So those are that, zooming in, that's the levels I just gave you on that daily chart. And so what you do is you take it back here, and you can see as I pull back here, this arrow is going back to where yields were back in the late 90s. That's what that is. And this is the early aughts right here. And so there's the financial crisis. So I cannot underestimate the technical significance of a breakout in yields should that happen. Now, we're not in any immediate threat of that happening right now. However, should we take out that trend line? But you also want to watch the 10-year. The market, pays, they pay attention to the 30. Don't get me wrong. Please do not get me wrong. The long bond's an important, it has to do with our, not only that, but U.S. debt financing. But here's the 10-year yield, TNX. And as I showed you, we had this bullish falling wedge recently right here with confirmed with positive divergence, divergent low. We broke out, we back tested, and then we've been in that box, that purple box that I have here. It's sideways trading range. So if we break above that, same thing. That should be net bullish for yields, which are bearish for bonds. Means that those treasury bond trades aren't going to play out. But we haven't broken out yet. As I like to say, resistance is resistance. And again, when I kick it out long term, which I just did, this is a very long-term, multi-decade chart going back into the early 60s right there. And this is, so that would be, should we go up and break above the recent highs over the last couple years? In the 10-year, same story. It's going to take yields back to where they weren't, haven't been seen since way back here in the late 90s and early aughts. All right, pause the video there for a second for a phone call. All right, so that's kind of it. So watch that on yields. And again, right now they're grinding around. This is a monthly chart we're on, so it doesn't look like a lot, but when you step down to the daily, again, we're grinding around first and foremost near term in this trading range. And again, if we break to the upside, that's bullish for yields, bearish for bonds. Otherwise, as I like to say, and the reason that we just went long bonds, went long, the long bond, is that it's, yields are at resistance, which means prices are at support, right? And so that's the MO. And when you recognize a trading range, you sell the highs, the top of the range, and you buy the bottom of the range, right? That's it. If you break out, then you can reposition in that way. Okay, we're tracking good on time. Let's move on. Let's just do the updates on gold, silver. A lot of this stuff in the headlines. In fact, let me show you something. What I've seen today. Let me pull up a few. Today I had just a flurry of emails from the news sources. Let me grab a few of those for you. Okay, I don't have them all. Just gonna look at some of the headlines that came through today. For those of you not familiar, Barron's of all, it's not any one publication, but Barron's is one of the more famous for coming out with major headlines that tend to mark tops and bottom from a contrary point of view. In other words, when the dot-com bubble came, there's many incidents. I don't have them all here. You could probably Google and find them, but they're almost kiss of death. If you guys remember the movie The Bronx Tale, Mush. They're kind of like mush, the mush of the stock market. And so here's this. Okay, so this one is from Barron's. Barron's, for those of you not familiar, is one of the probably the financial media source that's kind of known as a contrary indicator. They tend to come out with these type of headlines right at the top or a bottom at the exact wrong time, where they pretty much make the case that whether it's the market or in this case gold is only going to go up from here or go down. And this was today, of course. Gold has shown through tariffs, AI fears, and global risks. Why 2026 looks bright. I didn't even read it, but take that for what it's worth. And yes, guys, that's the same Barron's that came out with this on April 5th. Now, you remember, I think it was technically April 6th or 7th that the markets bottomed. It was the 6th or 7th. That's when I posted. We hit tons of our price targets on our short trades, even long-term targets on the long-term charts were hit. We hit the 200 days. And I said that Trump would, before there was the acronym TACO was even there, Trump always chickens out. That's what I predicted and covering all shorts, going hard long. And some Barron's at that point in time here's their article. So I think that says it all. Why the tariff damage can't be undone. Why the tariff damage can't be undone. So, and again, many of these examples over time. So just just understand that these can be a very accurate contrary indicator. And the thing about contrary indicators, meaning when whether it's a sentiment indicator, the AAII survey, which is American Association of Individual Investors, put to call ratios. There's many types. Um, is we just remember the whole reason it works is if everybody's bearish or most are bearish, then it means most have sold and there's the sellers are washed out. Likewise, when everybody's bullish, that's usually signs that the top is very near, because the last bull has bought his or her share and there's really no one left to buy anymore. Here's another one today, from the Wall Street Journal. No, Yahoo. I'm sorry, Yahoo Finance. Morning brief. Wall Street is very bullish for 2026. And yet another one today from the Wall Street Journal. Why Japan's market can keep rising, even though their 40-year long bond is flirting with new multi-year, multi-decade highs, but yet there it is. So you get the gist. And now let's look at the charts. So we're still above. In my last couple updates, I've given you the uptrend line right here, which gold needs to break, in which to trigger a sell signal. And so no change since the last video, unless it was right before here. We were poised to make and now have officially that marginal and still very much divergent high in gold. Gold being the most important one. Silver will follow gold. And I'll tell you, this looks like it's running out of steam. This is a 60-minute chart. You have a little gap right there. But again, if you want to play it safe, that's the trend line. Well, the one I gave you on the daily chart needs to break. But on this 60-minute chart, we're looking almost an identical setup to the last time we shorted gold right here. That break of that minor trend line. And we hit my fourth target, put in that divergent low, bounced. And again, like I said in the last video, we're slightly above where we were at that last breakdown. And so, again, looks like the 60-minute divergence may be the catalyst that can get us down through this more significant primary uptrend line on the daily time frame. Silver will ultimately follow gold, but just like gold, it needs to also break its uptrend line, same one I gave you recently right here. That's our uptrend line. That was the last uptrend line. We shorted silver on that break there. And then if that's broken, you have a couple of more significant trend lines as potential price targets, and also some price levels I could give you there. But silver is just a very hot trade going parabolic. And right now, again, to reiterate, no sell signals, but certainly some levels to watch in which to trigger those sell signals. GDX, gold mining stocks, right there, still working its way up that wedge. Last sell signal there, we hit 2 of the 3 targets, and next sell signal comes on the break of that uptrend line right there, only if gold breaks down. You want to see ideally gold and silver break it down. Gold should do the trick, silver will seal it, and then the miners will follow. They'll move down concurrently, but anyway. And Bitcoin's just, it's messy. I did add to that chart right here a downtrend line. Remember, we went long Bitcoin here, gave you 1, 2, 3 targets, but I removed that target right there. Just like on that BIZD trade, my instincts and chart reading said, you know what, pull it there. So we gained whatever that quick bounce was. We made a lot more on the Bitcoin proxies, the stocks that track, or not track. Some of them do track, like Strategy tracks Bitcoin, and then the other ones are just Bitcoin plays on it, proxy trades. So either way, I wanted to point out we have this trend line. So right now, hard to say, the bounce has just been very muted. Bitcoin can't seem to catch a bid. It may catch a bid if it breaks above that trend line. I don't have strong convictions on it right now. If it breaks the recent lows, it's going lower. Ultimately, I do favor more downside, whether, again, as I've said before, whether we bounce higher, maybe hit that old previous T3 or not. I think the upside is going to be limited. Max upside would be about 61.55. This is a really key level there. But I just wanted to kind of do an update for those of you in it. And then those proxy trades, Riot, again, T2 was a final and sold target. And so a lot of these trades, already hit their targets. and we sidestep that mess, this sideways grind. That's they're grinding around because Bitcoin's grinding around. So that's one thing I think I do well is kind of move outside. Not always. Sometimes I'll get caught in a dead money trade, but sometimes especially when you get those quick bucks, your targets are hit and they're double digits, very high profit targets in short order. Take the money and run. Not always. Sometimes I will hold out if I think there's a very good chance of additional gains. But so that's where we're at. And again, these guys are going to break whichever way Bitcoin breaks. It's that simple. Finally, let's just do a quick overview of the NASDAQ 100. On that, I always like to I try to include SMCI along with the tech stocks. SMCI still has that, it's kind of a mixed, cross currents right now, if you will. You have the positive divergence that we put in when we hit that fourth target. That was from the short here. T1, 2 hit, bear flag, continuation pattern. If this stock can't get going here soon, if it breaks the recent lows, it's probably going to continue this impulsive move down that we had out of the bear flag. And that is your measured target right there. It takes you down to T6. I just had a price alert go off. I don't know if you heard that. MOH. Let's see. We might have hit my next price target. No, it's just crossing up through T1. I'm sorry. We already hit T1. The target keeps resetting, and it's just telling me it went over there. All right, we're going to wrap it up by just quick overview of the market leading stocks in the NASDAQ 100. NVIDIA is still dead money in this trading range, this box here, other than that false breakout, which was a divergent high. And again, until, it's going to be bullish if it can break to the upside, bearish if it breaks to the downside. It's probably the most likely scenario. You also have the 200-day moving averages below, so quite bearish if and when those give way. Apple, again, like the market, kind of dead moneying, just going sideways for a while. Stop remains on a weekly close. So far, that move there, we never had a weekly close, only an intra-week break above it. That's still the stop. And there's a 50-day it's testing right now. And so I'll still maintain these targets on Apple. Alphabet still holding above that trend line I gave you in the last update right here, primary uptrend line with a sell signal to come on a break below it. But right now, no sell signal. It is clearly in an uptrend. Divergence is a condition, not a sell signal, but it is a condition that typically follows trend changes. You want to see, again, that break of that trend line. And again, I'm covering this whether you have any desire to go long or short Google or not. It helps determine where the broad market goes. So Microsoft just continues like a world champ to test that 200-day moving average. And if that breaks, that's a major sell signal. As I often say, if you are bullish and looking and on board with Barron's and the likes, and you think 2026 is going to be a great year, and you've wanted to buy Microsoft, if you don't buy it here at the 200s, when do you buy it? Again, that drop off that divergent high was a total drop of about 15%. And so if again, I'm highlighting that as an objective long entry point with stops somewhat below. Or if you take the other side of it and you think this divergence is going to play out for a much bigger drop, then you wait for a solid break and or close below those 200-day moving averages. And that's the lower of the two. The blue line is the 200 simple moving average right there. Amazon just took out this little minor trend line, but it's been also like Microsoft testing the 200-day moving averages from above ever since it regained them right here. It had lost them here, had bear market, a big correction, and that's it. So if you turn off all the lines, again, a lot of these tech stocks, watch these 200s. Right now, the majority are above them, so that makes it not an aggressive short time. If anything, you can be long. You can be short with start a short position based on the posture of these guys, the recent sell signals. But until and unless the majority of those market leaders take out those levels, it's I can't make the case to go aggressively short or long. There's Meta lost the 200s right there in one fell swoop and has been back testing them like I've been covering. If it gets rejected, you also have an uptrend line there. And then you can see my support levels. That's the route it will likely take. However, a solid recovery back above the 200 is going to be quite bullish. And if it does, there's a big old gap right there. Big old gap to be backfilled. And there's a potential target if you're bullish. But right now, you've been back testing the 200s from below. You're also back testing the zero line on the PPO from below. That puts you in a bear trend when you're below it, bullish trend when you're above it. So that's it. It's going to depend really on what the broad market does, most likely, but one to watch for sure. Broadcom, AVGO, again above that key yellow support level right here, 324-ish. And that needs to break to open the door, take out the challenge of 200-day moving averages. We are coming off that big divergent high, and that's why that's still my preferred scenario. But again, needs to break that support. Tesla, divergent high, and here's a minor trend line in which to trigger a sell signal. Other than that, the stock's in an uptrend, so there's really no buy signals. It's taken out that previous high by a hair, but so far there's no buyers on the other side of it. And because of the negative divergence, therefore it's a breakout that I put good odds will fail ultimately, whether we go a little higher first or not. But again, until you break that trend line, you don't have anything, any type of sell signals that I can see on this stock right now. All right, the rest of them, Alphabet, that's just the other share class. Palantir already broke, yellow trend line, then broke the white trend line following that divergent high, still above the 200s. ASML, divergent high, moving lower. Netflix took out that, Netflix more significant is this weekly chart right here. It took out the primary uptrend line right here. Let me get my line tool right there. And I really don't have any support on it on the weekly chart till we get down here at about 82. And then after that, about 69 or so. All right, I'm going to wrap it up here. We have pretty good time. This is a little over a half-hour video, not too bad. I'll be in and out, mostly out today. I have gotten back to some of the recent questions that I saw on the site. And if you have any more, please feel free to add them under this post, whether you want to update on an existing trade or something you're watching. Feel free to bump me for an update, and I'll get back to you as soon as I can. This has been Randy Finney with Right Side of the Chart. Have a great day.